you've just released your Q1 trading figures, record trading. What do you attribute the success to?
Well, it's obviously a number of factors. Firstly, we're building on a very solid base. So this is the 6th year of record results for Lookers. So we're on a very strong upward trajectory. We're building really on the platform, the successes of Andy Bruce and Peter Jones, and a lot of the good work and the good managers that have been brought into the business, and the change and shape of the franchise portfolio. And those things combined, have led us in favourable market conditions to be able to take advantage of that and show growth across all departments, new, used, after sales. Managing the cost base is challenging because we're all investing heavily in the business at the moment, but we've managed to do that and end up with the right sort of result on the bottom line.
And how would you actually describe current trading? What is the car retailing sector like at the moment? What are you seeing?
It's a challenge. It's still growing and the economic environment's still very favourable. So, we're still in a very low interest rate environment with very high employment. People have got equity in their houses. They've started to sort out their own personal debt. So there's confidence in the economy, and I think now we're through the election, that's helped bring more certainty and confidence again. So the backdrop is still favourable. Crucially to our industry, the exchange rate, the pound against the euro is still very strong. That enables the manufacturers to continue to subsidise the deals tactically. So if you like, demand and supply is still very strong for the UK. We all knew that the growth curve, the recovery in the new car market was going to slow down, and it has done, but it's still growing. And particularly in the fleet sector, we're still seeing a lot of opportunity in that area, and we're putting investment into it. So, I think it'd be wrong not to mention the fact that the growth in registrations is perhaps ahead of the natural growth in invoice sales. But those cars are finding their way to the market without being heavily distressed. And so at this moment in time, we're still seeing that as an opportunity.
Yeah. And how do you see the rest of the year, Q3 and Q4, panning out for both Lookers as a group and the sector generally?
Yeah, we're very optimistic about it because the bow wave effect of very strong new car market over the last 3 years means that we are almost certainly going to have a bigger opportunity in after-sales park and used cars. Those cars are coming back in part exchange now from the strong market 3 years ago. So we're extremely positive about the balance of the year.
And you personally, you've worked for a variety of big dealer groups. What do you think is the main difference between PLC and a non-listed group?
Yes, there are some differences, and I suppose the public nature of a PLC is one aspect, that you are accountable for the results and you regularly have to give updates as to how you're doing, which of course you don't in a private company. And that means that you have to think carefully about some of the decisions you make because that if you're investing heavily in the business, you've got to account for what impact that has on the bottom line. What I would say is that a private business perhaps doesn't need to have quite the same level of drive and dynamism that a public company will have. We're pushed externally for growth, whereas a private company can afford to say, well, we can take a longer term view of how that will pan out. So, it makes it actually in some respects a very dynamic, entrepreneurial, exciting place to work in a public company. But there are benefits to both.